with CAS is we're building a category. These are my words here. When you think of Netflix, you think of streaming, you think of Google, you think of search, and you think of CAS, you think of software intelligence, right? That's about owning and leading a category. When you're establishing to become the de facto name associated with that category, there's a need for a portion of your community that goes to market is hunting, evangelize, advocate. It was very different from working for a company that's an established category, where the demand is already defined.
Hey, this is Gareth Webb, and you're listening to Breakout, a show that cuts through the hiring noise. Here, you'll get an unfiltered view on what early and growth stage companies are doing so that you can take their best practices, processes, and frameworks and implement them to help you build teams more confidently. Welcome, everybody, to the Breakout Podcast. It's been a little while, but we are kicking off again. Today, we have Ernie Hu, who is kind of playing a hybrid role at Cast Software, combination of a CRO, COO position, leading the Americas for a global software business. Ernie, hi, thanks for joining us. Very appreciate it, you coming on today. Do you want to give a bit of an intro to yourself and the business that you work for, and so that people understand a bit more about you before we dive in?
Sure. So I've been in the software industry for, August will be 30 years actually. But yeah, 20 some years of that was in IBM when they started to embark and invest in software. So 20 some years there. And then I ended up with Cast, actually at crossroads with the founder because IBM unsuccessfully tried to acquire Cast, and this is how I was aware of them. Long story short, I joined Cast end of 2017, 2018. So this is the 7th year. And it's been fun. Short description, what we do for a living. Cast, we are an enterprise software firm. If you go to the website, we describe ourselves as the MRI for software. Yeah. Because there's a little story behind this. The founder is a firm believer. There's two anecdotes in life that I frequently hear. One is sunshine is the best disinfectant, or ignorance is bliss. Well, he falls into the sunshine is the best disinfectant camp, right? And long story short, he started his career software engineer for a firm, and he's working on software, and he realized that his colleagues, his teammates actually did not have a good idea of what he was doing. Good work, bad work, right? In fact, one of his other colleagues was tipping him and said, hey, it's good that when we work on the software, people actually don't know what's going on. So it's good, right? I like the obscurity. Again, written as friend, intel, intelligence, visibility, it's all good. It's not good working in the blind spot. And so he set about starting a firm, or rather coming about with a solution to shine a light on software. So we do for a living, long story short, MRI for software, where there are critical, custom, GORPy, legacy, complex software, and you want to know what's going on in there, that's our sweet spot.
Okay. Yeah, the reason I ask is there's been quite a lot of consolidation over the last 2-3 years, obviously in the SaaS world, not just in terms of all budgets in general, but in terms of hierarchical structures of businesses, teams, flattening of organizations. Some companies are getting rid of CMO title. It's all coming under CRO, CFO, COOs merging in some instances. So I think it's interesting, quite unique to see someone who's taking care of revenue and the operational excellence together. I don't see that should be a huge surprise to people, but I think the way people perceive it is that CRO is the kind of gunslinging salesperson that should probably never go near operations. And, you're, I would say, a different type of CRO, having known you a while now, and very measured. So I think it's just interesting, right, that you're a PE-backed business, you're doing well, you're growing, you've got great logos, good brand, but, again, speaks to, I guess, some level of prudence in the business that you don't need a COO or a C-suite for every part of the business. Like, you can stay lean and mean, but obviously must have to use different parts of your brain at different times of the day, week and month. But it means you're obviously very close to the business, very close to the product, very close to the customer, which I think is a great thing. The reason I asked is I wanted to ask a bit more about, it's clearly a very technical product. It's clearly a very technical buyer for the most part. So how does that impact let's just talk sales at the moment, because I know that's kind of a big area of push and change for Cast. How does that govern the sales culture or the chain, when you've gone more to SaaS, more to subscription recently, PE backed, so there's obviously some pressures there commercially. How does that, coupled with a very technical level of acumen required impact your culture and who you bring into the business?
Good question. Let me break this down. You use the word pressure. I wouldn't use the word pressure. I use the word discipline, actually. Constructive discipline. Constructive, and then it also become discipline parameters that you work against. Well, anyway, let me first start with the following. So one of the things that we made in terms of the go-to-market adjustment a couple of years ago is we step back and say, well, take a look at the life of a typical seller from CAS. Okay? Whether you're assigned the banking financial sector or whether you're assigned the global competency sectors, GCC, GICs in India, or whether you are system integrators, right? That's just the notion of the segment you are being authorized and mission to sell CAS into. And there's slightly different business models, right? But the problem statement we were starting to see, or we wanted to address in the spirit of more effective and higher efficiency was, the question was, are the sellers being tasked with too big a portfolio under the umbrella of MRI for software? And the outcome was we felt yes, okay? And I'll give you an example. You may be representing CAS and end up talking to professionally trained lawyers. Okay?
Yeah.
Professionally trained lawyers that are in the software industry that represent a particular fintech. Fintech is a common customer segment that we are into. And fintechs are feverishly pumping out new versions of software or new offerings. That's a financial organization that is essentially a software company. They make their living out of new iterations of software. And they have multiple copies of the version of software that they provide to the customer. Now, when I say lawyers, one of the job definitions is to keep the company legal. And I'm quoting from a particular customer. So, Ernie, I need to make sure that everything our company does and goes to market is legal. Well, what do you mean? Well, whilst the company has immense amount of pressure to produce software, and we're very dependent upon the open source domain, there might be violations, there might be certain code that doesn't belong to us, or there are copyright issues. And so we need a way to look at the software. And so therefore you would engage in a discussion saying, we have a solution allowing you to get level of granularity to look for copyright issues, like whether the C is a capital C and all that, it gets kind of gory, but you're talking legal jargon. Or within the umbrella of the MRI for software CAS portfolio, you could be ending up talking to somebody that is talking about the efficiency of the software, and you get into acronyms like FP, function points, AFP, automated function points, different profile, different domain. It gets quite gorpy and technical, right? So the reality is you never quite know where and how you will end up in an organization depending on the profile, what use cases. And one needs to actually have some level of foundation in those domains to be able to master it correctly, or else it's going to be, you're going to all over the place and you end up with an intellectual discussion. You might make a friend, but you don't actually get the end game, which is you had a need and I have a solution and we address it.
Because of a lack of focus, essentially, like spreading oneself too thin.
Yeah, and if you're not a master of a particular area, you were drifting, right? You're drifting, both sides, right? And so one of the changes was, hey, the notion of specialization came up, right? And if you take a look at our website, we very much focus on, we convey to the market, there's the MRI for software, that's what we do for a living, but we also have specific capabilities. One is called CAS imaging, one is called CAS highlight, and these are very much aligned to specific pain to the solution or use cases. Okay, and so therefore, then we started to embark on everything specialized, right? So a specialized seller would be only looking for a certain discrete set of buyers profiled by specific pains, and same thing for imaging. Is there overlap? Absolutely. I'm not saying that we eradicated the seller that sold everything, but we also did ourselves a favor vis-a-vis simplification to have established specialization. And this all, culminates to speed. We often like to talk about, because we're building a category where what we do for a living, it's about adoption. So looking for new logos, new adopters, and the question of what is the most effective and efficient way, ACA being a Trojan horse, to get into a logo. Right? Well, if you make things simple, boom, right? So anyway, And revolving around the point is a couple of years ago, we decided to establish specialization for simplicity, efficiency, effectiveness, etc. And it's yielding the results. The desired outcome is we have a growing list of cast adopters, subscribers, and once we're in the door and do a good job, then you recur and you recur, right? The nature of the software business.
But to get to that point, you're improving the relevancy of the conversation and the ability to turn that conversation into a customer.
Yeah, you focus on the particular pain rather than trying to figure out, throw it on the wall, right? We've seen in the past, I think arguably you can have 30 different use cases in the cast portfolio. You can do this presentation and say, we do all these things, and which one do you want? Well, the reality is actually most customers actually don't know what they want either. In fact, because what we're doing is what we define and describe ourselves as creating a category. Many times your prospects didn't even know they had the problem, let alone the solution, right?
So on a sort of tactical basis, the change being then, instead of just having sales professionals, AEs, directors of sales, whatever the title, in regions, you've now gone very much focused on type and size of customer and just kept them bound to that. For example, like you said, like banking, financial services type thing.
Yes. We speaking of that, we've also, since we've known each other for the last 2 or 3 years now, right? Time goes quick. We have grown rapidly the various, what is the word I want to use? Various go-to-markets or the route to market, right? So as an example, should there be a prospect that has seen what we do on a website, has heard from another, somebody in the neighboring industry, what's going on, they can choose to go to the various marketplaces by AWS and Microsoft and Google to acquire the software like that. That is a new means of acquiring our technology and capability. That's now evolved from 3 years ago, whereas everything was face-to-face, right? And of course, beginning of the call, I talked about our capabilities, which are embedded or powering other offerings or products or capabilities. Our technology will show up vis-a-vis a third party, right? You may end up buying something from Microsoft and it's embedded in there, right? As an example. Yeah. So hence why we find multiple routes to market. The go-to-market has expanded significantly in that regard from 3 years ago when it was primarily face-to-face.
Okay. So you've got a few changes that you guys have had to institute and drive. There's the PE ownership, there's the staying relevant, which I think is a very good way of putting things as a founder, like ensuring you're relevant, even though the whole kind of proposition, what you're doing is sort of the same, but it obviously changes. How would you describe the current sales culture at Cast versus like maybe when you first joined now? So like now compared to when you first joined, or 3-4 years ago.
Sales culture. Well, I mean, the profile, the demographics has changed, and I'm just pausing and reflecting, right? Because I've been in the software industry for a long time. So enterprise software, I guess by reflex, you would think of the typical profile, face-to-face, talking about database and middleware, and let's do a POC, let's do the restitution, the readout, right? That's the classical enterprise software profile of a seller. And much to what I alluded to now, the seller is very familiar with the notion of ARR, right? Accumulating, piling up their revenue base in their territory. I was very, very acute and sensitive to customer satisfaction, keeping the company abreast on the latest features and functions. That will be one of the compelling reasons for continuing to renew and expand. Land and expand is, the common vernacular and nomenclature now. Comp plans are evolving where obviously there's a higher incentive for continue to find new recurring revenue streams, right? And so, the profile itself is different, right? We're increasingly seeing more sellers coming from a SaaS background, right? And are very accustomed to the fact that in their territory, they think of ways to maximize the notion of software intelligence provided by Cast. And if some customer decides to, I don't want to actually talk to you, but I heard about you vis-a-vis some marketing channel, some sort of lead, some sort of awareness, and I go to the Google Marketplace and download it, right? This is the sort of new way, right? How you get revenue in your territory, right? evolving from hand-to-hand combat to let me figure out what is the maximum reach so that I get the maximum return vis-a-vis the multiple routes to market.
How do you sense that in like an individual? Are you saying like the kind of historical enterprise salesperson was more of like this kind of process-driven whale hunter type fake, like you say, wine and dine face-to-face stuff, whereas now it's just more get the value across quick, find multiple points of contact, be more opportunistic with who you're talking to, find ways to get in, knowing that once you're in and you do like once you're in and you're being adopted, then you can scale the revenue. Do you feel like it's more opportunistic, faster paced type sales profile in terms of the people that work at Cast or the people that are being successful?
Faster pace, yes. Working, aligning, gravitating, being more knowledgeable with the associated ecosystem as additional point into a target. Or in addition to also understand there are multiple ways for the consumer to acquire the capability. It doesn't have to be cast directly contracted with the consumer. It could be through third parties, right? In multiple formats. So I guess there's also a notion of, this is probably a different discussion for different podcasts, but under product like growth, it's very much for additional reach without the face-to-face touch. It's the additional reach vis-a-vis the autonomous engine.
Yeah. The product is selling itself to a certain degree.
Right. So you would probably, when you think about your marketing budget, you think about different ways to use that.
Yeah.
Anyway, it's a long answer to your question. The profile has changed because you think about there are different avenues to get your prospects to understand and hear about you, right? In some cases, they don't necessarily need to talk to you, or to be more blunt, some of them don't want to talk to you.
Yeah, I think we all have to sort of acknowledge that sometimes people don't want to talk to us to get what we have to offer. I've kind of become comfortable with that these days myself. Like, we've got customers that are signing up to use us, happy to part ways with cash to use us, but still don't want to get on like a 30-minute conversation all the time. They just want to get going. And that's just the habits of buyers now, isn't it? Like, they're intelligent. They have once they have conviction, it tends to be binary, like it's high conviction. It's not like, oh, we're not sure. So they see your logos, they see for you, that you are embedded with the cloud infrastructure, you're embedded with the systems integrators. That's probably enough for a lot of people. And then it's like, well, I'll just figure it out on my own. Thanks very much. So the sales assist comes into play slightly after the fact, which I think is interesting. And still, though, a lot of CROs are looking for these very alpha, hunter closer, big confident salespeople, which I think is a bit of a mistake sometimes, because I find some of the best salespeople are just very organized, focused, highly productive, with good intuition about people. It's not always the alpha in terms of who's got the loudest voice and the most confidence. I say that because I feel like at Cast, there is a little bit of that. Like, there's not a lot of salespeople are switched on, smart, think like a CIO or a CTO. They're kind of trying to get into their head, or an IT team, versus arrogant, overly confident, verbose salespeople.
The big software account managers, I think that's what we use to describe those, right? They master the entire conglomerate that they're assigned to. Look, I'm not saying that those are retired. There are, there's always, if you look at your business as a portion of the business, first of all, these big targets, like a big bank, I mean, effectively, the different lines of business are like different customer sets anyways, right? So there's cross-sell, upsell, and a lot of business that comes from that. But then the nuance with Cast is we pride ourselves in addition to describing ourselves MRI for software, we're building a category. I mean, we want to be, these are my words here, when you think of Netflix, you think of streaming, you think of Google, you think of search, you think of Kleenex, you think of tissue. Well, when you think of Cast, you think of software intelligence, right? That's about owning and leading a category. When somebody's like, I need to look at the software, oh yeah, you call Cast, right? Or you Google Cast and see what you get Cast. And so when you're building and establishing to become the de facto name associated with that category, there's a need for a portion of your community that goes to market is hunting, evangelize, advocating, right? It was very different from working for a company that's an established category where the demand is already defined, right? IDC is telling you this. There is a defined addressable market of X, Y, Z. Not quite the same when you're building a cabinet, right? So that itself is also changes.
You got to help customers get like the light bulb moment of, yeah, this makes sense. Like you have to get them to that point sometime. Yeah. Very good. Like, in terms of, a lot of companies have done this. Some are still doing it. You guys are moving to pure subscription SaaS. What's been the biggest challenges there for you as a business and you individually as a leader going through that shift over the last few years? Like, from the license deals, the on-prem stuff to the pure cloud-based SaaS subscription model. What's been hardest? Or has it actually been really easy?
I'm not sure it's hard. It's just, I think it's identifying where you change, right? Ultimately, comp plan, that's a generic term, but comp plan to me is a contract between the company that states very clearly the objectives and the parameters between the seller, what they do for the 6 months or the year, depends if you're biannual or annual. And right, so it was the shift, right? Just making sure that there are elements of a comp plan, regardless of it's the traditional enterprise software model or the SaaS model. There are elements that we wanted to preserve. Obviously, speed or velocity. That you want to incent people. The more after you sell, you get incented on that. We made a conscious change. What I would say that the generally available offering is now on a subscription basis. We used to offer multi-year licensing, right, versus now a SaaS. So we officially tell customers that we do annual, right? Now, if you want to do something special, sure, we're pragmatic. Let's see whether we can do something that aligns to your financial model. But the generally available offering is on an annual basis. And so transitioning from one comp plan to the other, again, the contract between the company and the seller, it was preserving the elements we want to keep, speed and acceleration, but then also the objective was the more money you want to make, the more new recurring logos and customers we have, right? And every time you bring new recurring dollars, that's where you get the high incentive, right? Mm-hmm. So I wouldn't say it was the hard part. It's just a thoughtful exercise to make sure that the objectives are clear. And then one recurrent feedback, which is recurring every year, how to make it simpler, how to make it easier to understand, right? So it's also a balance between
comp plan. You're referring to comp plan, yeah?
Yeah. Financial team needs to be able to crunch the data so that they can make the commission calculations quickly, easy, whilst the sellers are to understand how they make their number, right? The reverse engineer, okay, with this comp plan, how am I going to cover my territory?
So where have you landed now? Like, let's say someone's interviewing with you now, or people are interested in Cast. They're coming in as an AE. You're incentivizing for net new logos. You're incentivizing for speed of deal. So how does that work in combination? You'd have to tell us exactly, but like roughly.
Obviously, there's a clarity with the territory. Okay, it's important to know so you don't end up you stepping over people's shoes. Then there's a notion of sizing the territory. And then with the overall size for the full year, then with regards to speed and acceleration, there's a quarterly element of how much the expectation per quarter, right? And then there's a rate with regards to primarily you make your money by new logos that generate recurring revenue or incremental recurring revenue from existing logos, right? There's a higher incentive for that. And then if you do end up something that's not quite that, but we don't want to penalize people, that's a lower rate, right? So that's pretty much the construct of the comp plan, the parameters of it.
In hindsight, you land somewhere with a comp plan and it makes sense, but sometimes it takes a few iterations. So there's always something that's going to piss somebody off, right? Like that's the hardest part of a comp plan, I find anyway. It's just like finding one that everyone's totally cool with and loves is hard, because as a business, you might feel like you're giving away too much. Some people want to be able to stack things up in a month. Some people want quarterly. Some people want every 6 months, just based on their own circumstances. So sorry, have you landed on any kind of frequency of bonus? Is it quarterly or 6 monthly, or is it combination? Quarterly bonus. Yeah. Okay. Feels like that's the best overall, especially for like higher ticket AE type positions.
You said hard, I say challenge, the same thing.
Yours is a more positive mindset.
Yes. Actually, earlier discussion when we were talking about the multiple routes to market, right? When the world is simpler, boots on the ground, your banking finance, boots on the ground, your government. I mean, everybody's in their swim lane. So it's A to B. You sell in that territory, it's yours. But we've actually had to deal with I don't want to say the complexity, but the sophistication of our business. Yet we have to be simple, right? And the comp plans is something we've had to deal with. That was one of the challenges because, as I just alluded to, typically a seller now, they're assigned a territory and there's a number and there's a target, the prospects. I want them to be thinking, listen, that's the this fintech company is what we've been trying to crack into for 5 years, right? It's yours now. Now, I'm not going to penalize the seller if they figure it out. There are two other ways because these third parties have a very tight alliance and a relationship and they're influential. We go through them, right? Versus direct. Now, you want to make sure that all the individuals that rightly so have worked on it will be compensated. Yet you don't want people hovering around the deal that didn't really do much to get a free ride. That's the challenge, right? The clarity of making sure always the right people that did the right work will get their right, deserved compensation versus folks that were stacked, right? And to me, the stacking topic is something we need to be mindful of, right? Because companies that are profitable and are agile are making sure they don't have layers and layers upon people. When you close the deal, you end up actually losing money because of all the commissions, right? You pay for a deal, right?
Yeah, you need to protect the revenue as well as make sure, as you say, everyone's motivated. I got one kind of final strand of questioning really, and it's about what you've learned. You talk about challenge and sophistication rather than difficulty and complexity. I think everybody craves simplicity in this age, but we're also kind of every business that's getting built is doing things in more sophisticated ways. What's your learnings from as a leader? What's your learnings having gone through this 2-3 year PE playbook that's kind of happened over? So you've been bought out of public markets, you're private equity backed, different kinds of standards and expectations. What have you learned, and what have you had to adjust yourself as a leader, kind of going through that journey?
Yeah, I mean, there's many things I've learned as I continue to go through the journey. But the one thing that perennially is popping up in the spirit of learning is, like, I've been here 7 years. There's folks here that have been here 2 decades plus. Back to what I just borrowed what Vincent said, keeping the company relevant. I strongly believe the notion of when somebody looks at something from fresh eyes, there's always something. Because I don't have a term, castified, or been cast in too long, you miss things, right? There are blind spots. You tell yourself, you rationalize it. No, it's like this, right? Sometimes the most obvious thing, somebody asks, why do you do that? Good question, right? With fresh eyes, right? So our investor, the private equity firm, first of all, they do, if you take a look at their portfolio, they're very diverse. So they're not what I would say, 100% expertise from day one on enterprise software and SaaS and all that kind of stuff. And so therefore, sometimes their questions are learning because they don't know, but sometimes it's a question of curiosity, and it leads you're right, just because we didn't mean it's right or relevant. So that's why I use the word, I think that best describe the reaction, the feeling. Under this ownership, it's been constructive because it pauses you. There was a reason why they asked that. And, there's a reason when they asked it, maybe it's not relevant anymore. And maybe whatever we did, a process, how we reacted, it served that purpose for a particular time, but times have changed, and sometimes you need to be reminded with fresh eyes.
Yeah. I mean, I find it one of the hardest things to do running a business is if you read lots of books by very successful business people. Take, for example, like How Google Works by Eric Schmidt. He talks about just ignoring the competition, ignore them, focus on customer, focus on your internal operations, build, iterate. It all sounds great, but then if you're so blindsided or blinkered or focused, you can miss a competitor that maybe done something you could have done 6 months ago, and then it's too late, right? You have to kind of dip up every now and then and have a look around.
This reminds me precisely if you take a look at the technology, leading the way on the product side, is to make it as simple as possible or as self-service as possible. So therefore, again, going back to the example, folks that are interested in us but don't want to speak to a salesperson, right, face to face, they can quickly do so, like it, demo it, try it, and then go to the marketplace to download it, right? That is an additional reach and additional market to us. So one of the things is with our investors that are not well versed, and they look at the website, you guys understand it, we don't understand it, right? And we are like maybe your potential market that you're trying to reach under the self-service world. When I say folks that have been here 2 decades, they look at our technology, they absolutely understand the acronyms. They absolutely understand what this means, what this implies. But fresh eyes, I don't know what you're talking about. So that's been very, very powerful reminder, right? Guiding, leading the way for us, or the discipline per se, right? Take out your rationalization and look at it with fresh eyes.
Yeah, like give it to your brother-in-law or someone who's never touched that world and see if they get it. And that's the thing, isn't it? We're all very used to these autonomous consumer apps that, do things for us in the home or on our mobile, and we kind of expect that in B2B land, and it's happening in many cases. Okay, so you think like the main learning or the most refreshing thing about the PE journey has been kind of that fresh pair of eyes or set of like a new lens coming into the business to sort of question the status quo a little bit?
I describe it, you take out the rationalization. Rationalization when it's, it triggers you to, think twice, right? Obviously with their support, it's allowed us, again, back to the earlier point, how we've evolved from multi-year licensing to now the discipline of annual subscription because we can afford to, right, with their backing. So that's a dynamic that I think it's very healthy, right? Because in the past, it's not that, I don't want to convey the wrong message that we were not disciplined, but when you're a public market, you live to die for the next quarter, right?
Yeah, you've got post results and
the customer's cornering you. I want this, but now I want multi-year, right? Now, no, we're running by this model.
Yeah, standardized. Yeah, no, I like it. I think it's really helpful. Good. I mean, we're coming up on time. I've got one final question, which is more for, if I think about the people that are likely going to listen to this conversation, the way that this is distributed, the way that, we engage with people in the technology industry, I'd imagine a lot of salespeople, account execs, directors of sales listening to this, potential VPs or aspiring VPs. If you were to give out like a few pieces of advice to somebody out there that kind of knows they want to be a chief revenue officer, a CRO, the leader of top line for a software business, what are, looking back at your career and what's happened recently and where you are now, like what do you think are like the 2 or 3 pieces of advice or guiding principles or things that you would tell people to go and do or learn or stop doing to kind of improve their odds of getting into that kind of a position?
My responsibility in CAS is a global responsibility. So what I mean is that there's geographically teams, whether in Italy or India, they are a distance away from headquarters where decisions are made. Some of the decisions, top down, some of the bottom up. And in my prior career in a much larger organization, I had been working in the field, whether it's Hong Kong or Asia Pacific, China, and there's headquarters. And so I'm on the receiving end of directives or mandates or directions, whatever it may be. But I have the opportunity to work in the headquarters, as they say, where the sausage is made, or you are a fly on the wall. All right, those little anecdotes. And I realized the power or the danger of an organization can be so misaligned if a message is not clearly communicated to the field. The alignment of the company in the field, right? There's the execution and there's the folks thinking about the brand, right? They have to be very aligned, or else you're all over the place, wasting time against efficiency and all that kind of stuff. Messages can be diluted through layers. Message could be diminished through time, right? So I've always felt that alignment is very important. So coming here, I'm just very, very cognizant because now sometimes people, you're a headquarter person now, CRO, local, you're headquartered, right? So maybe the best way to describe it is engagement, right? Engagement and alignment has right? So a business review call, you could make it one way. Just tell me your results. I take notes and I move on, right? Update the CRM, how it says. But it can be even more powerful when you feel like it's a duty to inform the field. This is what's happening. This is why it's happening. This is the objective. Then you're tight, right? Then boom, you get everybody aligned to the same objective. That's my reaction to your question. There's many other things, but this is the first thing that pops up.
So basically, like, what's going on? Why is it happening? Making sure everybody understands that there's no version control among the field or geos in terms of like centralized decision making, clarity. Yeah.
And there's a vested interest, right? I think those are powerful elements, part of the dynamics. Once you harness it.
Well, look, that's a good note to finish on. Thank you very much, Ernie. It's super interesting and helpful to a lot of people, I'm sure. Personally, I find the whole cast story one I'm sure one day there'll be a book or something written about it, like given its history and legacy. But yeah, thank you very much for joining and sharing with us today.
You're welcome. All right, be well.
Thank you.